That chart, the 391 days, right? 1,064 days of gains and then 364 days of declines. And that's number one. So it's the pattern recognition in people's minds. I think the second is, as much as people have been excited about AI and quantum,
The conversation explores why crypto sentiment feels unusually negative despite constructive industry developments. Tom Lee explains that fear is being driven by expectations of a 4-year cycle, uncertainty around quantum computing's impact, hidden leverage unwinds, and broader macro volatility. He highlights that the Federal Reserve's unclear policy stance fuels anxiety across all risk assets, with crypto reacting especially poorly to bad news. Lee also discusses the shakeout in digital asset treasuries, DATs, noting that most will fail, but strong ones will survive through scale, utility, and real business models. He argues Ethereum will ultimately benefit from stablecoin and RWA growth despite short-term price disconnects.
I think quantum is kind of viewed as quantum progress is seen as a threat to crypto. Or crypto hasn't figured out whether it's good or bad for crypto. Because as you know, there's a lot of people talking about the encryption risk for Bitcoin and other cryptos because of quantum. And the third reason I think it's felt worse, Frank, is maybe the price hasn't really reflected the mass liquidations that have taken place. You know, I have a long history in macro and looking at markets, and if we look at risk assets in general, I think people become overly tied to a narrative and simplicity, thinking that that explains markets. Like, for instance, I think too many people that do equities think, hey, a company has great earnings, the stock should go up. Or they'll be like, inflation's high, so stocks should go down. Or, the ISM's below 50, so we should be in a bear market. Funds and retail investors, and they've had what you'd say is their price has outperformed the expectations around earnings growth. So basically the risk premium has fallen or their multiples have gone up. So that's what's derated. And if someone asks me why things have derated, I think it actually is just possibly a couple of things. One is the Fed isn't really dovish. I mean, the Fed, people haven't decided, and the Fed still hasn't set up in the system. I mean, in equities and in crypto. And so we're just seeing a leverage reset. I don't know if that really helps, but I mean, I'd say that those are contributing to like why crypto probably isn't performing as well as we think, because you're exactly right. There's so much building being done. And actually we know that there is so much being built by Wall Street wanting to actually embrace and build on the blockchain. So, does that mean crypto is broken, or are we in a period of time where the fundamentals are doing better than clarity that most investors want? And part of it has to do with there's, of course, been a very visible dispute between the White House and monetary policy, and even questions of Fed independence. And as a consequence, Powell, I think, has done a really good job of navigating this. But keep in mind, he is the Fed chair, but then he has to corral all the other voting members, of the committee, the FOMC, and each of these members. But of course, the Fed can, correct really quickly. Mm-hmm. But over the weekend, people read the paper, like you said, and price makes people drive sentiment. So not only do people panic over the weekend, but as you know, outside the US, everyone looks at this and if they're getting concerned about monetary policy and they own a lot of crypto, they're just going to sell their crypto.
So what do you think? Obviously, rewind the clock 2-3 months ago, I feel like the inflows from ETFs, from DATs, drove the crypto market in addition to macro.
passive exposure to crypto, it should really serve a function. And so MicroStrategy, as you know, is really the blue chip and the flagship and the first crypto treasury. But what they've done is they've accumulated a lot of Bitcoin, and then they've essentially turned it into a type of financial institution where they're productizing their Bitcoin holdings and offering yield products, and in a way that takes advantage of the characteristics of Bitcoin, which is the volatility of Bitcoin, and it's also stable store of value, right? I mean, basically, Bitcoin over the long run is going to go up in value, ever recover. So basically, most companies that ever go public are failed equities. That's the reality. That, like, when someone says like SPACs came and went and only 5% survived, that's pretty true of IPOs. That's pretty true of spinoffs. That's basically pretty much true of any business. We know that in, like, for instance, in restaurants, 95% of restaurants fail after 3 years. So does that mean every restaurant is a bad business? No, it just shows you the businesses that survive they can survive, because if they've raised money and they have 3% yield, or if it's Solana, 7%, in theory, it's a viable entity. As long as they didn't take on debt, they will still have this problem of their stock price being stuck in the mud. And there is several ways to solve that in the future. One is the company itself is now essentially a closed-end fund trading at a discount.
Mm-hmm.
Right? So what can they do? One, they can actually become an investment and, stable coins and real world assets. That none of that really has to do with DATs, unless the DAT itself is funding specific projects. And on the Bitcoin DATs, I think that they had a theory that everybody would own a little bit of Bitcoin on their balance sheet. And I don't think that's wrong. But I think the DATs that were small and subscale, saying that because they own Bitcoin on the balance sheet, they should be more valuable than another company that owns Bitcoin on the balance sheet. That's probably where the market is just repricing everything. And they might even be pricing whatever that into a DAT. They're going to be much wiser to say, if I'm going to put my crypto into a DAT, I want to make sure that holding is then gobbled up by an equity investor. Because if it's just throwing it into a discounted price thing, that's what they call throwing good money into bad, right? I would never say, let's buy the 10th best AI stock trading at a discount. And because
you brought this sort of ETH is the undergirding force of stablecoin, which obviously is the kind of pillar of the 2025 narrative. How do you sort of communicate, or how do you see the growth of stablecoin actually accruing value to these networks? That is to say, maybe some people might look at them as being separate things. You look at October as an example. RWA growth was up 8%, ETH, Bitcoin down maybe 15, 20%, whatever.
UGI company. So the more people that use it, the more valuable it became as a platform for advertising. And of course, the network effects kicked in. And then today, Facebook dominates all the advertising business, but that was not evident in 2007. L2s, it may make sense, especially on Ethereum, to let the L2s grow, create a huge ecosystem, and not charge direct proportionate gas fees. Because if this is where everything is going to be built, then the L2 is going to accrue significant value. I think that I think it's really absurd when people say you could have 10 trillion of stablecoin incumbency. People saw that the long distance telecom companies had all the money, and these are 50-year-old people. They probably barely found utility in a cell phone anyways. But young people saw cell phones very differently. And not only that, as cell phones grew, it transformed communications and it became bigger than gaming, media, landline, cable combined, because there were so many, not only network effects from owning a lot of users, but you created a whole vast array of new services, including mobile advertising. So if an Ethereum blockchain captures 70% of all RWA and someone says it's not going to benefit Ethereum, that just because they have expertise in one domain or even one regime doesn't mean that they're going to be the dominant mindset for the next regime. It's really an important thing. I think people really need to open their eyes. And in fact, even as people are putting and writing the obituaries for DATs, they're forgetting that a couple of these are really going to be transformational businesses. But